Where are you seeing the flows going at a time when, of course, we know that the pandemic is raging across India, not to mention the Southeast Asia hasn't done that much better?
Good morning, Shery. Thanks for having me. I think investors are still looking towards North Asia at this particular point in time, where North Asia, for the large economies like South Korea, Taiwan, and of course China, has been doing quite well in controlling the pandemic. And we see this as well in the first quarter GDP numbers from these various economies at this particular point in time.
What are you seeing in terms of the earnings results that we're getting from all of these different economies? Could that help offset some of the weakness coming from the health crisis?
It's certainly very specific, right? So far in the first quarter, well, we're not fully through it yet. But if you look at specifically, say, IT, especially hardware IT, the earnings has been very good. Several places beat expectations due to the tight supply and pricing power, especially in the semiconductor space. And I think also importantly, some of these players are now actually rising expectations and indicating that their visibility on their order flow and pricing has extended into the second half. So that type of earnings results in particular sectors is very helpful for investors that's looking for growth and some visibility on earnings right now.
We are starting to see some easing of travel restrictions in countries that are getting the virus under control, but you've got a contrarian view on the travel space, don't you?
I guess you can say that. I think for travel, there's definitely good news. Yesterday, we saw that the EU is leaning towards allowing US visitors that's fully vaccinated via vaccine passport. And obviously, we had the announcement of the Singapore-Hong Kong travel bubble to initiate in the late May. But the reality, I think, is still going to be a while before we see how various economies and countries decide on opening up their leisure travel. So it needs to be agreed upon by the various countries, right? Because right now it doesn't make a lot of changes to leisure travel when if you can visit a particular country without quarantine, but on the way back to your own home country, you still have to have a quarantine. I think unless we get some more clarity on that, that travel is probably not likely going to rebound significantly, especially international travel. For large domestic economies where they have a large domestic travel industry, I think the situation is a little bit different.
And more broadly, based on the earnings we've seen so far, how are valuations looking to you? Is it time to take some profit, or is that a little bit risky at the moment?
It's a bit of a fine balance. I think in particular for hardware tech, because there's a much longer operational history, investors in these names are balancing the good earnings with their historical price multiples and making their adjustments accordingly to that. But for a lot of growth sectors, if you will, in say the EV and consumer space, there's probably more of an expectation and willingness to tolerate not a lot of earnings at this particular point in time, but looking forward continuing to the growth outlook on their revenues at this point.
What can we expect on the semiconductor side of things? Because that's been really what's fueling some of the growth and rally across Northeast Asia. But at the same time, we know that there's a shortage ongoing.
I think the various guidance that we've seen so far are some of the very large industry players, right? For example, TSMC. We have seen them reiterate their very large CapEx guidance. And they're also giving indications that they expect the tightness to extend into the second half. I think that's given a lot of investors in hardware IT some visibility or comfort that this is not going to unwind very quickly. At the same time, I think it's also very sector specific. It does depend on what part of the hardware IT sector you're in. If you're in the substrate part of the business, which is still very, very tight, and that's obviously good news for companies that's operating there right now. I think this is going to continue.
Yeah, that seems to be the assessment so far, that the shortage is here to last for a while. Let me ask you about the dollar, because we keep getting these conflicting reports on where Wall Street stands on the weakness or strength of the dollar. This year it's been a little bit more tricky to assess. Where do you stand?
I think the dollar has been fairly volatile this year. I'm obviously not a currency expert, but I think the dollar outlook right now, given where global rates are probably still fairly accommodative for emerging markets, particularly emerging Asia for now. It's not at the level where you're really worried about the FX outlook for some of the weaker macroeconomic countries and economies in Asia. But at the same time, it's also still supportive for the export outlook for some of these countries are still, at the end of the day, very export dependent to the developed markets.